This PLTR stock metric is about to surge by 500%. Sofi stock has two major news catalysts coming up. Hey there, fellow financial explorers. Get ready to buckle up because today we've got some news to share with you. We're diving deep into the world of stocks and dissecting some juicy articles that might just have you on the edge of your seats. In this episode, we're serving up some hot scoops on two stock market heavyweights, PLTR stock, that's Palantir Technologies in case you're wondering, and Sofi stock. Yes, the digital finance game changer. We're talking about a Palantir stock metric that's poised to rocket by jaw-dropping 500%. Hold on tight. But that's not all. We've got not one, but two major news catalysts coming up for Sofi stock that could send shockwaves through the market. Are you curious yet? You should be. We've got some amazing articles in our arsenal, like is Sofi stock a buy? And ignore the Sofi skeptics. Sofi stock has more potential ahead. Plus, we'll be unraveling Palantir's AI vision, which Wall Street can't stop raving about. In Palantir's AI vision paving way for success, Wall Street says, and checking out why Palantir Technologies Incorporated is outpacing the stock market gains in Palantir Technologies Incorporated outpaces stock market gains. What you should know. So if you're hungry for insights, ready to navigate the ever-exciting world of stocks, and want to stay ahead of the curve, you're in the right place. Let's jump in and uncover the secrets that could make or break your next investment move. Is Sofi stock a buy? First off, let's dive into the world of fintech and explore whether Sofi Technologies is a buy. Sofi hit the public markets in June 2021, but it hasn't been all smooth sailing for this digital finance company. Its stock is down about 59% from its IPO price. However, in 2023, things started looking up, with Sofi stock surging 98%, leaving the Nasdaq Composite in the dust. On the bright side, Sofi's recent performance is impressive. Q2 2023 saw a 37% year-over-year revenue increase to $498 million, and their customer base grew 44% since Q2 2022 to 6.2 million members. They even raised their full-year guidance, expecting over $2 billion in adjusted revenue. As government-backed student loan payments resume after the pandemic pause, investors hope Sofi's business gets a boost. However, there's a shift from student loans to personal loans, with $16.5 billion approved since 2022, raising concerns about unsecured loans in an uncertain economy. Profitability remains a challenge. Sofi reported a $48 million net loss in the latest quarter. While it's an improvement from a $96 million loss a year ago, sustained profits are essential. Is Sofi a buy now? The digital finance space is ultra-competitive, offering similar financial products. Rising defaults and the need for consistent profits are concerns. While tempting, caution is advised. Sofi may need to clear more hurdles before it becomes a no-brainer addition to your portfolio. Keep an eye on this evolving story. Ignore the Sofi skeptics. Sofi stock has more potential ahead. Now, let's talk about Sofi Technologies and why you should pay attention to this fintech player, even if some skeptics have reservations. Sofi is no hidden gem. Many Americans and retail investors are well aware of Sofi stock. Traditionally known for student loan refinancing, Sofi has expanded its digital-first financial services, positioning itself as a potential rival to fintech giants like Square and PayPal. In 2023, Sofi stock sentiment has seen a significant boost, more than doubling in price since January. This impressive surge has raised questions about whether there's more room for growth or if the stock has already priced in its future success. Currently, Sofi is unprofitable, with earnings per share estimated to go from a negative 20 cents this year to 25 cents by 2025. Given the current stock price, around $9 per share, some may argue the valuation seems lofty. However, the real intrigue lies in SoFi's ambition to transform from a fintech player into a full-fledged big bank. Having obtained a national banking charter in 2022, SoFi is rapidly winning over customers. With 2.7 million customers already on board, the potential for rapid growth remains, even if customer acquisition rates moderate. What makes this story even more captivating is that the way it's gaining attention. CEO Anthony Noto is actively promoting SoFi's bid to challenge traditional banks, emphasizing not only convenience and service, but also competitive interest rates. While some skeptics might accuse Noto of painting an overly optimistic picture, his statements are grounded in facts and recent performance. SoFi has been demonstrating its capabilities and track record. Don't expect the newfound awareness of SoFi's growth story to trigger another meteoric stock rally. Instead, it's likely to sustain the stock's current upward trajectory, ensuring gradual process. In conclusion, despite skeptics, there's a strong case for SoFi having untapped potential. With profitability on the horizon and growing confidence in its strategy, SoFi stock could continue its ascent. It's received a respectable B rating in Portfolio Grader, hinting at a promising future. So keep a close watch on this evolving narrative. The SoFi story is far from concluded. Palantir's AI vision paving way for success, Wall Street says. Now let's talk about Palantir Technologies and how their vision for artificial intelligence is catching the eye of Wall Street. Palantir recently held its AIP conference, and it seems like their AI game plan is making waves in the business world, which is turning heads on Wall Street. Wedbush securities analyst Dan Ives was pretty impressed with what he saw at the conference. He noted that a wide range of industries, from financial services and healthcare to transportation, logistics, manufacturing, and more, were well represented among the attendees. This suggests that Palantir solutions are finding relevance across various sectors. What really got Ives excited was how quickly customers were integrating Palantir's offerings into their operations. Some were fully integrated within just 1 to 4 weeks after signing contracts, a speed that Ives found quite impressive. It's a clear sign that Palantir's AI vision is becoming a reality and making a real impact. But that's not all. Customers at the conference also showcased how Palantir's software suite was helping them ramp up productivity significantly. These efficiency gains are a testament to the effectiveness of Palantir's solutions. Looking ahead, Ives believes that Palantir is on track to monetize its commercial offerings effectively. He sees a bright future ahead, with strong spending trends in the commercial sector expected in the second half of 2023 and into 2024. Ives is so confident in Palantir's potential that he maintained his outperform rating and set a $25 price target for the stock. Bank of America analyst Mariana Perez Mora also chimed in, highlighting Palantir's new AI strategy as being scalable and efficient. This approach allows companies to seize opportunities without committing hefty amounts of capital upfront. Now, it's worth noting that Palantir stock did dip about 2.5% in early trading after the conference, but that doesn't necessarily detract from the long-term positive sentiment expressed by these analysts. So while the market may have had a minor reaction, Wall Street seems to be quite optimistic about Palantir's AI vision paving the way for success. Keep an eye on this tech player. The future could hold some exciting developments. Palantir Technologies Incorporated outpaces stock market gains. What you should know. Lastly, before we end this video, let's dive into the latest on Palantir Technologies Incorporated in the stock market. PLTR recently closed at $15.46, up plus 0.85% from the previous trading session, outpacing the S&P 500's meager 0.07% gain. In the past month, PLTR shares surged by 6.46%, beating the business service sector's 0.59% gain and the S&P 500's 0.38% increase. The big news is Palantir's upcoming earnings release with some exciting projections. They're expected to report earnings of $0.06 per share, signifying an impressive $500 year-over-year growth. Revenue estimates are equally promising, with projected net sales of $555.02 million, up by 16.14% from the previous year. Zooming out to the full year, analysts anticipate earnings of $0.23 per share and revenue of $2.22 billion, marking significant increases of plus 283.33% and plus 16.25% respectively, compared to the previous year. It's important to note that recent changes in analyst estimates for Palantir often reflect short-term business trends. Positive revisions usually indicate optimism about the company's profitability and are linked to stock price movements. However, Palantir's valuation is worth considering, with a forward PE ratio of 67.49, higher than the industry average of 23.84. The stock's PEG ratio, accounting for expected earnings growth, is 1.19, slightly below the industry average of 1.38. In the industry ranking, technology services, to which Palantir belongs, is ranked 147th, placing it in the lower 42% of all industries. Remember, top-ranked industries tend to outperform the lower half by a significant margin. In summary, Palantir is showing promise with impressive numbers and positive sentiment. Keep an eye on the stock. It could make some interesting moves in the days ahead. And that's it. We hope you enjoyed this video. If you did, don't forget to hit like and subscribe to our channel for more updates. Thank you for joining us in this video, and we hope to see you in the next one. Happy investing!